Something is wrong with the global economy. Not broken, not crashing, just wrong. The signals don't match anymore. Inflation is cooling, but nothing feels cheaper. Rates are expected to fall, but borrowing still feels expensive. Markets go up, but confidence doesn't follow. And every few months, something suddenly shakes the system, then disappears like nothing happened. It doesn't feel like a crisis. It feels like something underneath the system is quietly shifting, and almost nobody is talking about it, because everyone is focused on what's visible: inflation, interest rates, politics, headlines. But the real change is happening somewhere deeper. Imagine standing on solid ground. Everything looks stable, but deep below the surface, something is slowly moving. You can't see it, you can't hear it, but over time, it changes everything above it. That's how real economic shifts happen, not with noise, with pressure. Here's the problem. Most people are watching the wrong things. They're watching inflation numbers, central bank decisions, stock market movements, but those are reactions, not the cause. The global economy doesn't run on money, it runs on liquidity. Liquidity is how easily money moves. Think of it like oxygen. When it's everywhere, everything feels easy. Borrowing is cheap, markets rise, opportunities expand. But when liquidity tightens, nothing breaks instantly. Everything just becomes harder, slower, more fragile. That's why things feel different today. Mortgage rates stay high, markets feel unstable, businesses struggle more, not because something obvious is wrong, but because the system underneath is starting to change. For decades, the global economy had a hidden advantage, a silent engine that made everything feel easier than it actually was: cheap, flowing, constant money. And over time, everyone started believing that was normal. But now, that system is shifting. And when the system changes, the old playbook stops working. So the real question is, what was this system, and why is it changing now? Because once you understand that, you'll understand why everything feels off, even when everything looks fine. You have to go back. Early 1990s. Japan's economy collapsed after a massive bubble. Real estate crashed, stocks collapsed, growth disappeared. And for decades, Japan struggled to recover. So they did what central banks do. They cut interest rates. Then they cut them again, eventually to zero. And when that wasn't enough, they went even further. They pushed rates below zero. And then they did something even more extreme. They controlled long-term interest rates. They basically said, no matter what happens, we will keep borrowing costs low. And they did that for decades. This created a strange situation. Inside Japan, money became almost free. Now imagine you're an investor. You have access to near zero interest rates, but your country gives you no returns. What do? You go somewhere else. You borrow cheaply in Japan, convert that money, and invest it where returns are higher. The US, stocks, real estate, global markets. This strategy became known as the carry trade. Borrow cheap, invest where it pays more, keep the difference. Now imagine millions of investors doing this at the same time for decades. That's not just a strategy anymore, that's a system. Money flowed out of Japan into the entire world, into US bonds, stock markets, housing, risk assets. And that constant flow of cheap capital made everything easier. It lowered borrowing costs globally. It increased liquidity. It pushed markets higher. And over time, the world became dependent on it. Because when money is cheap, people take more risk, companies borrow more, markets expand faster, and eventually, everyone assumes this will always continue. But it doesn't, because this system only works as long as one thing stays true. Money in Japan stays cheap. But recently, that started to change. Japan began raising interest rates for the first time in years, and suddenly,
The cheapest money in the world was no longer as cheap. And when that happened, the math changed. Borrowing became more expensive. Returns became less attractive. Risk increased. And when the math changes, money stops flowing the same way. It slows down, or worse, it starts reversing. And that's exactly what we're seeing now. When that flow reverses, it doesn't just affect investors, it affects everything. Because for decades, Japan was one of the biggest buyers of global assets, especially U.S. bonds. And those bonds help determine long-term interest rates. Here's the key idea. Central banks control short-term rates, but long-term rates, they depend on supply and demand. So when a major buyer like Japan slows down, demand weakens. And when demand weakens, yields rise. And when yields rise, the cost of money rises everywhere. That's why mortgage rates stay high, even when rate cuts are expected. That's why stock markets feel unstable, because higher rates reduce valuations. That's why businesses struggle more, because borrowing is no longer cheap. Everything connects. A shift in Japan leads to a shift in capital flow. That leads to a shift in bond demand. That leads to a shift in interest rates. And that leads to a shift in the entire system. That's why things feel off, not broken, just different. Because the world is no longer running on the same conditions. For decades, the system had a hidden advantage: cheap, constant liquidity. Now that advantage is fading, and when that happens, you don't get an immediate crash. You get something more complex, a world that looks normal but feels unstable. Markets become more sensitive, growth becomes less predictable, money becomes more expensive, and most people don't understand why, because they're still looking at the surface. But the real shift is happening underneath. And the biggest risks in markets are never the loud ones. They're the ones hiding in plain sight. And right now, the global economy is changing, quietly, but fundamentally. And the people who understand that early don't panic, they adjust. Because in a changing system, the biggest advantage you can have is seeing it before everyone else.